What's going on, you guys? My name is Zach Hartley and welcome back to my weekly watch list video. In this week's video, I want to walk you through some of the stocks that I'm looking at in the week ahead, as well as how I feel about the market conditions and what forces are shifting the supply and demand dynamic right now that could give us a couple of great opportunities. So I'm going to walk you through everything, but first, let's start off with those market conditions. So here is what is happening in the market right now that we, one, need to be aware of, number two, we need to understand, and number three, we need to start thinking about if this continues to get worse or continues to progress, where is the opportunity going to be for us as investors? So that's what we need to think about here. And here are what the market conditions look like as far as I'm concerned. So number one is this Russia-Ukraine war. This is having some pretty big impacts on the market, and I think we're slowly going to see it spread to more and more markets. I'm going to talk about what I mean by that in just one second, but that is a big concern right now. We also have extremely high inflation in Canada and the United States right now. We still have some pretty major supply chain issues, and we have a lot of chip shortages, so those could represent some opportunities. And as of right now, we have dramatically higher energy prices than what we've seen for the last 2 years. Now, I was doing a little bit of digging into what kind of commodities are doing right now, and with the Russia-Ukraine, I keep hearing everybody talk about wheat and how that's kind of the breadbasket of the world. So I wanted to do a little bit more diving into the prices and how the prices have changed since this conflict has unfolded. And oats have actually gone up the most by about 96% year over year, and wheat is actually in second place, up about 78%. After that, coffee has actually gone up pretty dramatically in the last year by 72%, and then cotton, palm oil, canola, milk, corn, and the list kind of goes down. But realistically, it's oat and wheat. Those are the kind of the two largest commodities that have been affected most dramatically. We also have canola, which is sort of in that same category there, but we're seeing a major impact here, and both oat and wheat are major exports of Russia and Ukraine, so it's definitely something that we need to consider here. Now, once we know all that, once we do our research and we understand all those market conditions, the question we want to ask ourselves is what companies will do well in this environment with these conditions. And so in my mind, Russia is one of the largest wheat producers. It's pretty understandable that people aren't going to be buying wheat from Russia because they don't want to support Russia. And so that is a big supply that we're going to have to make up somewhere else with a steady demand, which means the price could go up. So I think wheat companies could do well. I also think fertilizer companies will do well. I don't know if you've seen the price of fertilizer, but it's up by about 100% this year. And so fertilizer for growing the wheat and growing the other crops is also getting more expensive. And if your food becomes more expensive, that also adds to inflation. So something else to consider. I also think energy stocks are going to do very well. If they have been producing energy at a profitable level for the last 2 years and now the prices are going up, it means that they're just going to make more profit. The banks also tend to do well in higher interest rate environments because they can make more money, and any company that can fill a gap in demand. So if people want something and because of whatever's happening around the world, that supply is no longer there, any of the stocks or any of the companies that can fill that supply gap, those companies are going to do very well. And so that is what I'm looking for. Those are the companies that I want to watch out for. I'm going to point out a couple of them to you here in just 1 minute. But first, let's take a look at the broad market and see how we're doing like each week. Okay, so first off here is the NASDAQ. This one's really interesting. As you can see, we saw our sell-off over the last sort of 2 months here. We dropped all the way down to 12,500, and over the last sort of 2 weeks here, we've just seen a beautiful recovery from 12,500 up to about 14,200, which is exactly where we saw some resistance in the past. So if we can break through this level, that will be a very good sign. If we get rejected and we have a negative and we have a bearish week next week and we fall from 14,200, that would be a very bad sign. So that's what I'm looking for in the NASDAQ. Almost a similar pattern here in the S&P 500. You can see we found some previous resistance around 4,550. We are now approaching that exact same level here. And so on the NASDAQ and the S&P, we are at a crucial level. I am watching for the breakout or the rejection. We're going to see one of those two things happen next week, more than likely. Now, the last one here is the Dow Jones. I always like to look at the Dow Jones because it's kind of a different segment of the market compared to the S&P 500 and the NASDAQ. And as of right now, we basically traded sideways for the last week, and we're still trying to get that bullish breakout that we saw in the S&P 500 and the NASDAQ, but we just haven't seen it yet. Now, when we go to Bitcoin, this pattern is actually forming just absolutely beautifully. I called it out a couple of weeks ago, and I said, hey, we've got some major support at 45,000 that has now turned into resistance at 45,000, and we have ascending lows. We have higher lows, consecutively higher lows. That is giving us an ascending wedge pattern, and that is a very, very bullish pattern. And if we see the breakout of 45,000, that would be a very, very bullish sign for Bitcoin. I currently have kind of a medium position in Bitcoin with regards to where I'd like to be. So if we see that breakout, I would probably add a little bit more to my Bitcoin position. My miner is also doing extremely well right now, so thank you for anybody asking and curious. I'll have some more videos coming out soon about that. But first, let's go into earnings for this week. We've got a couple of things going on here. First, coming out on Monday, we've got XPeng, which is the Chinese car company. That's going to be really interesting to see what happens there. We also have Bitfarms reporting on Monday, not much after the close, or at least from companies I follow. And then on Tuesday, we have LuluLemon. We also have Micron Technologies. We have Sundial. We have a couple of different companies reporting on Tuesday. We have Logic coming out on Wednesday. We have BlackBerry on Thursday, and nothing to report on Friday. Now, if you are interested in seeing which stocks I am buying and selling, and you want to join a community of traders and investors, then definitely consider signing up for my Discord chat. It is $5 per month, and that is where I post all of my buys and sells, as well as my research. So if you'd like a little bit more access to what I am doing, definitely consider checking that out. But without any further ado, let's start jumping into the stocks for this week. And the first companies that I want to point out to you kind of go to that original theme that I was talking about, is what is going on in the market, what stocks are going to benefit from what is going on in the market, and how do we take advantage of that as investors. And one of the stocks I just want to point out to you is Nutrien. This is one of those stocks where energy goes in. They're the largest fertilizer company in the world. They're actually based in Canada. They're based in Saskatchewan, just a couple hours away from me. And they're really interesting because energy is a large part of fertilizer. Agriculture is a large part of fertilizer. And all of the costs there have gone up. And Nutrien is able to make more profit when the cost of that fertilizer goes up. And so their price, their stock price has absolutely skyrocketed lately. It would have been a beautiful trade. We might be a little bit late into it, but if this trend continues, I think Nutrien is going to continue to run up. But you can see right here, you could have made a nice, beautiful 35% right here on the breakout of $100. Very easy breakout trade, increasing volume right here, and a catalyst to go with it. You couldn't have asked for anything better. Now the next one here is Canadian Natural Resources. This is one of the largest energy producer stocks in Canada, and they're also at an all-time high because of these high energy prices. It's really good for these producers, because if they could make money selling these resources back in the low prices of the last 2 years, now they're just rolling in the dough right now because the prices have gone higher and they have trimmed down all of the fat in their companies, and they're operating lean and they're profitable already. So I really like Canadian Natural Resources. If energy prices stay high, this is probably one of the picks that I would go into with regards to oil and gas. Definitely not a huge position in my portfolio, but if you think that oil and gas prices are going to stay high, Canadian Natural is probably a good option for you. Now, the chip shortage. This is another one of those things that is happening in the market. We just saw a couple of car companies either stall or halt or change production schedules because they aren't able to get the chips for their cars. And the reason that I'm really interested in this is because it's a very interesting market where everybody uses these chips. A couple of companies program the chips, a couple of companies make the chips, and only one company really makes the machine that makes the chips, and that company is ASML Holdings. And so the entire industry with regards to high-end computer chips literally boils down to this one company. And because of that, they have a huge strategic advantage. They have a major moat around their business. They have extremely steady revenue. They have great revenue growth, and they're extremely profitable. So I really like the stock. Now, with regards to the stock price, you can see they got as high as $895. They came all the way down to $600 and bounced off support in this sort of key area here. And now we are starting to break out of the previous trend and test our moving averages. So it looks like we could be starting to see a trend change in regards to ASML. And if that continues, I want to hold this stock long term. I like the company. I like the business model. I like the financials. There is nothing that I can point out about this company that isn't extremely good. Next company here is LuluLemon. Like I said before, LuluLemon is reporting earnings. I believe it is on Tuesday after the market right here. And the reason I like LuluLemon, number one, I wear a lot of their clothes. I like the company. I like the brand. I like the products. I think what they do is high quality and they do a good job. So I like that. I can stand behind that message. And so that's kind of the first level of support. After that, the financials are good. They have good profit margins, they have good revenue growth, but the stock price got as high as $485, came back down to 300, which is the exact same level that it has found support at for the last basically 2 years here. And so we saw a major run up and we've come back down to support here. We have got earnings on Tuesday, and if those earnings go well, I think we could see a nice bounce off of support. If earnings go poorly, we may fall down below support, and if there's a catalyst or a good reason why the earnings went poorly, could also be a reason to short the stock. So LULU is kind of at that in-between level where I think something's going to happen, but I want to give it a little bit more time and a little bit confirmation before we make a trade. Next stock here is Calloway Golf. Now with summer starting to come around and golf season starting to step back in, could be a good kind of seasonal rotation for Callaway Golf. We have seen some very bearish trading basically from April of last year all the way to April of this year. It's basically been one straight year of bearish action from $37 all the way down to $24, which is again the same level where we saw some previous resistance in the past in 2020 and 2021. And so now we have a key level here. We ran up, we came back down to this key level here, and I think with everything going great for Callaway Golf with regards to Topgolf, the products, the seasonality, and just the business model of what they do, I think it could be a great opportunity. So I'm looking for the breakout of this trend here and the bounce off of $20. Now the last little section of this watch list here, I want to talk about drones because the drone section is starting to pick back up. We just had Drone Delivery Canada report their earnings. I believe it came out like yesterday or 2 days ago. And so I'm going to do a full video kind of breaking down my opinion of their earnings. I sort of do that every time it comes out. And then we also have a lot of action from ACHR Aviation, Lilium, and Joby Aviation. And just to show you what I mean here, here is Lilium, some major volume over the last 2 weeks and what looks like it could be a breakout of the trend. We also have Joby Aviation clearly breaking out of the trend with extremely high volume on Friday. And we have ACHR Aviation here. I don't have the right chart here, but I will try and throw it in right now. I'll throw it up here. And as you can see, we are approaching a key level right here, and it looks like we could break through it with regards to ACHR Aviation. So that is what I'm looking for in the drone space. Now, just as a quick summary to this video, here's the message I'm trying to get across to you. Number one is identify a market force. Maybe it's the war, maybe it's inflation, maybe it's a chip shortage. Whatever it may be, identify it in your head and then try to invest in the company that will benefit the most from that market force. The goal here is to make sure that you understand what is happening in the market before choosing individual stocks, because if you can identify what stocks have the wind at their back and then you can invest into the good companies that are already in that industry, that is going to give you the best returns. That is what I like to try and do, and that's what I try and tell people to do. So if you're interested in learning more about that, definitely consider checking out my stock market fundamentals course. It's hosted on Skillshare. It's completely free. It's 10 hours long. There's 11,000 students and 380 reviews for you to check out. The link is down below, and I promise you it'll be the best free resource that you can find online. There's also a bunch of other free resources in the description down below. So if you get any value out of this video, please remember to click that like and subscribe button, and we'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.